The financial system is being rebuilt right now, and most people don't even know it's happening. Jack Dorsey said that the internet needed a native currency, and the best option for that right now is Bitcoin.
I'm interested in the internet having a native currency. The best manifestation technology for that is today Bitcoin.
And Scott Bessent just announced that the new financial system will be built on platforms, protocols, and systems.
America will write the rules of the next economy. It will be shaped by the platforms, systems, and protocols through which commerce flows in the 21st century.
I didn't hear you say anything about the use case of it. I mean, what if there was never really a credible fundamental story to begin with?
And somehow people are still asking, what's Bitcoin's use case? They're asking the wrong questions. While everyone's watching the price and the negative sentiment out there right now, the plumbing of the global financial system is being replaced. Banks are evolving, money's moving on chain. And today I'm going to show you why Bitcoin isn't trying to replace the new financial system. It's going to be the reserve asset that powers the next one. This is Dante Cook with Bitcoin Simply. Let's go. People laughed at crypto for years. It's fake. There's no use cases. But today, the world just flipped. Circle, the company behind USDC, just became a federally regulated national trust charter bank. Not a crypto startup, not a fintech app, a bank. And in his announcement, Jeremy Allaire, their CEO, didn't just call it another financial product. He called it a new money layer for the internet. But I'm sorry to tell Jeremy and everyone else, these new financial tools, these stablecoins, these new crypto rails are just what they sound like, new innovations. But Bitcoin has been running and operating flawlessly with this same premise since 2009. Bitcoin at its core is infrastructure for the new financial system, a real-time decentralized global payment settlement network that other innovations will be built on top of. And this is why what Scott Bessent shared at the Economic Club of New York is so important. You have to understand this if you want to understand where the puck is going.
Is that America will write the rules of the next economy. Of course, unlike much of the last century, the next era of domestic competition will not be confined to the movement of goods across oceans and ports. It will be shaped by the platforms, systems, and protocols through which commerce flows in the 21st century. In each of these domains, standards become strategy. For the nation that fails to help write the rules of the next economy will sooner or later answer to those that did. If authoritarian or mercantilist systems write those standards for their own advantage, the global economy will become more coercive and less favorable to American interests. If America and our partners set open, secure, market-based standards, then the 21st century will tilt toward freedom and prosperity by rewarding innovation, protecting intellectual property, and ensuring that competition is not distorted by discrimination. That is the system America should champion, and it is the system that our partners have every reason to build together with us. I think, for example, of the new frontiers in financial technologies, digital assets, stablecoins, tokenization, and new payment systems will help to shape the future of money.
The future of money, platforms, protocols, systems. That's infrastructure language. That's backbone language. And a company and CEO who knows the backbone and infrastructure of the financial system probably better than anyone right now is Vlad Tenev, the CEO of Robinhood. And he also says that the lines between finance is blending with crypto rails.
I think that I don't know how controversial this would be to say with this audience, but when I say this with a more general audience, very controversial. I actually think cryptocurrency and traditional finance have been living in two separate worlds for a while, but they're going to fully merge. And we're talking about tokenized stocks and other real world assets. Stablecoin, which is an early form of this, the great example of this. I think that crypto technology has so many advantages over the traditional way we're doing things that in the future, there's going to be no distinction. It's kind of like how technology itself was viewed as a sector of the economy for a very long time. Still is, there's technology companies and everything else. I think crypto will go through a same transition where we're sort of like thinking about it in its own bucket, but eventually, everything will be on chain in some form or another, and the distinction will kind of disappear.
The distinction will disappear. And that's why, although I'm not a shareholder of MicroStrategy, I completely understand the future that they foresee. They think that Bitcoin is the most important financial asset of the 21st century, a true native internet digital currency, and that's why they're rushing to build platforms and systems on top of it. Listen to what Phong Le has to say and what he thinks about the future of finance and why Bitcoin is the backbone of it.
I think we will be the largest holder of the most important asset class in the world. I think 100% of financial institutions will have a Bitcoin strategy core to their business. I think 75% of nation states will have a Bitcoin strategic reserve. I think 50% of individuals around the world will hold Bitcoin. I think billions of AI agents will be transacting with digital capital and digital credit in some way, shape, or form.
Like MicroStrategy, we too believe that Bitcoin is the backbone of the new infrastructure of financial products. And so does Ledn, the leader in Bitcoin-backed loans. Since 2018, they've been the leader in issuing Bitcoin loans to people all across the globe. In fact, they've issued over $10 billion worth of loans to people and have never lost a single sat or cent of customer money. That's because they have all the protections, policies, and programs in place to ensure that your money is safe and it's never rehypothecated or lent out. You post Bitcoin on the platform, you borrow up to 50% of that value. Fiat gets in your account in less than 6 hours. Go to learn.ledn.ao/simply to get started. The company who has experts who are probably the most knowledgeable of anyone in the world of what the future of finance will hold are the team at the Bitcoin Way. They've been teaching people for years how to set up private nodes, how to become their own private bank, how to build a new financial system on top of Bitcoin. If you're interested in being prepared for that future, schedule a free 30-minute consultation with their team. Now let's zoom out. Bitcoin has a massive backdrop in that the U.S. leader of the economy, Scott Bessent, the Treasury Secretary, just said that the new financial system will be built on open protocol standards aligning towards freedom, with platforms, protocols, and systems being the backbone. But also on the macro backdrop, you have a massive financial catalyst, which is the Fed is shifting from QT to QE. The Fed is no longer shrinking its balance sheet, but increasing its balance sheet. The Fed's balance sheet just hit $6.7 trillion this week. They're calling it reserve management, but Bitcoin and risk assets don't care. They call it liquidity. And it's not just on a macro perspective that there's tailwinds behind Bitcoin. The technical charts are also lining up. If you look at this chart, 2026 is shaping up exactly like 2022, 2018, and 2014 as Bitcoin operates on a 4-year cycle, as everyone has talked about in the past. And what we see is that in 2027, well, things tend to turn around based on historical charts for Bitcoin. If you want a more colorful perspective, you can look at the rainbow chart, which shows that the 2023 bear market was the last time that Bitcoin dipped below the lowest band in the rainbow chart. It was all rainbows and up from there. But according to hardcore analysts like Durden BTC, the power law is showing that Bitcoin is cheap right now. And that's not just from a Bitcoin analyst, that's also from Fidelity's head of global macro assets, Jurian Timmer. He says that $60K looks like an attractive bargain based on Bitcoin's power law dynamics. So those are the macro backdrops at a large scale from the Treasury Secretary, but also from the charts. But from a narrative perspective, Bitcoin still has a negative sentiment, and that's what people need to overcome right now. They're still asking questions like, does Bitcoin have a use case? People don't fundamentally understand value and value investing. You need to swim against the current when everyone else is going the opposite direction. And there probably is no better thinker in value investing than Bill Miller, one of the earliest investors in Amazon and also Bitcoin. This is his son, who now runs Miller Investment Partners. Listen to what he has to say about debt, deficits, inflation.
Bitcoin's higher today, but it has been a brutal run for the cryptocurrency. It's around 50% now off its all-time highs. For more on where it might head from here, we're joined now by Bill Miller IV. He's Miller Value Partners CIO and Chairman. Welcome back.
Thanks for having me, Scott.
Why is Bitcoin performing so poorly?
I think the main reason right now is the fact that Clarity Act, like it could be stalling on ethics concerns, but if you look at it over a much longer time horizon, the fundamental case for Bitcoin has never been stronger. So the CBO this year is projecting $1.9 trillion in a deficit. So let's look at that from a different angle. The marginal obligations being created that are unfunded by our country is 50% bigger than the entire market cap of Bitcoin. So you have to think, is this the best way of accounting for capital when we can just come up with new obligations year in and year out? The debt cycle gets worse and worse. I think there are better ways to account for capital that are based on consensus, energy, and transparency. So we're still very optimistic about the technology over the long term.
I know, but I didn't hear you say anything about the use case of it. I mean, what if there was never really a credible fundamental story to begin with?
Well, then it might not exist, right? So Bitcoin came into existence in the heels of the 2008, 2009 financial crisis, when everyone saw all of the money printing coming down the pike, and that's what happened. So the fundamental use case is stronger, and you have to look at the underlying sets of dynamics out there around you when you make market calls, and so the fundamentals are still incredibly strong.
What if the biggest problem here is it's simple, and that there's just a lot of money going into other more durable, fast-growing areas of the market around the AI trade, and Bitcoin just can't compete with that?
Well, I think AI, very, very long-term, is incredibly deflationary, and to make up for that, you're going to have to come up with a whole bunch more dollars to fill in for all the debts that are out there. So one of the ways out of the debt spiral is inflation. And Bitcoin is a hedge against that over the long term. So I think overall, that's a very good thing over the long term for Bitcoin.
If governments continue running trillion-dollar deficits, well, they have three options: raise taxes, default, or print money. And with AI looming in the background being a deflationary technology, they're going to have to print a bunch of money to cover that gap. And my guess is they print big. Bitcoin doesn't assume that governments fail. It assumes that governments will continue behaving like they always have. Bitcoin doesn't have to replace banks. It doesn't have to replace Wall Street. It just becomes the reserve asset which finance and Wall Street built on top of. In the end, if you look back in history, the best protocol won. That's TCP/IP, that's email, that's the internet. And now, maybe, just maybe, that's Bitcoin. The financial system is deciding that Bitcoin is the protocol that it will build on top of. The question is, do you see where the puck is going? And if you do, and if you want to stack as many sats as possible, you find ways to buy Bitcoin other than just buying through an exchange. You can buy Bitcoin through mining Bitcoin, but you don't have to set up a miner or manage hosting or repairing machines. You can outsource that to SaaS mining. You give them your money and they give you sats directly to your wallet, pain-free, with no contracts or no middleman. When they earn sats, you get sats. Use the QR code to get started with SaaS mining today. And if you want to know where the puck is going, subscribe to the channel. We drop fire like this 7 days a week. This is Dante Cook with Bitcoin Simply. Happy stacking.